What's up, everybody? Welcome back to We Talk Money. I'm your host, Chris Dunn. I've got Travis and Nikki in the new studio set up with me as well.
Woo!
It feels good to be in person, yo.
Yes.
Hey, yes.
We've been traveling. We've been on the road. We've been bouncing around between different setups. We're back in Austin, Texas. Good to see you guys. How's it going?
Well, the markets are selling off, so I'm a happy girl.
Why is that? Markets
Why
are
is
down.
that?
That's bad.
These markets needed a correction, y'all. This is good for us. This is when the money's made.
That's true. That's true.
That's right.
Yeah, man. I mean, we've got crypto that's down big, stocks that are down big. Let's take a look at the charts. I've got Y charts up, which, Nick, do you want to say thanks to our friends at Y charts?
Yeah, thank you to our friends at White Charts for sponsoring the show. Thank you very much. Got my coffee. Basically, White Charts, I use it for all my fundamental analysis. I'm constantly comparing different stocks and trying to find good values out there. So it's really good for not only professional investors like advisors, but also for individual investors too that are looking to do some deep research. So check out whitecharts.com. You can get a free trial, or if you mention We Talk Money podcast, you can get 15% off your first subscription.
Sweet. All right, well, let's go ahead and just talk about where we are, what's happening. There's a whole lot of stuff to talk about this week. Just taking a look quickly at the drawdowns from all-time high. We got the S&P that's down about 8.5% off of the all-time high. NASDAQ down almost 15% off of the all-time high. And Bitcoin down over 50%, or as of yesterday, it was down about 50% from the all-time high. So a ton of volatility, a ton of action this week. I know we're kind of smack dab in the middle of earnings season. What else is going on?
Well, have you started getting the should I buy Bitcoin texts yet?
Yeah,
I've been getting
actually
some.
not so much. You have?
I have.
Really?
Yeah.
Okay.
Okay.
I've been getting a lot of like NFT texts, which we should definitely talk about that. But
Okay.
I don't know. What about you guys? Are you feeling fear? Are you getting like people looking to buy? What's the vibe you're getting?
The fear is palpable. It is a wild time in markets, and I am getting the family texts, what do we do? Is the market going to crash? All the silly YouTubers with all of their, thumbnails like, market crash,
Yeah.
That's how we're in a bit of a dicey market environment. There's a Fed meeting tomorrow. You got the big bellwether tech stocks like Microsoft reporting after hours today, Tesla tomorrow, Apple on Thursday. Meanwhile, indices breaking below key levels on Monday. We went from down 4 or 5% to up on the day by the end of Monday. It is just a wild environment out there. But like Nikki said, these are the types of environments where you can actually, set yourself up very well for, multi-year returns if you know how to play it right. Unfortunately, a lot of people, I think, are getting liquidated and maybe got ahead of their skis a little too much last year. So, you got to be able to stay in the game. You got to be able to, survive to be able to thrive beyond, this correction. But I don't think we're headed for Armageddon. Everyone's all of a sudden concerned about the Fed raising rates by 1% this year. And
with inflation at 7%, like that's really gonna, matter much.
Yeah, exactly. So, I think we're getting from a point of no one caring about anything or about valuations last year to now everybody's in the same camp of sell everything. We're going to be in a bear market for years. And I think the real truth is somewhere in between there.
Yeah.
Wall Street bets, where are they now?
It's kind of like, we've talked about this before, how when there's fear in the markets, everybody rushes for the exit at the same time. And we've also seen that in crypto, right? Like obviously stocks are down 10 to 15%. Crypto, Bitcoin is down, call it 50%, but there's a lot of other altcoins that are down 70, 80, 90% or more, which has been just devastating for people that got overexposed. And, for anybody that wants to go back and watch our episodes from about a year ago where we started talking about, hey, market sentiment getting a little overly exuberant on the bullish side. Things are just feeling a little, I don't know, like hubris, a lot of cockiness, a lot of overconfidence, a lot of certainty that prices are going to go to six figures. When everybody gets on the same side of the equation, it becomes a crowded trade, and the market likes to punish that, right? When you have everybody that's in agreement, usually the opposite happens of popular sentiment, right? So I think that's kind of what we're seeing, and we can obviously dive into the charts, but I just want to commend you guys because the last time, if we just jump in and look at the daily S&P here, March 2020 was really the last time that we had significant selling in the markets. You know, the S&P was down like 35%, and you guys were right there buying the bottoms and really ripping hard on those dips. Do you have the same level of conviction today, or has anything changed?
I am actually buying pretty aggressively this week, and I know you have made some started to do some dip buying as well, because even though the indices are only down 10 to 15% and could have more to fall, there are a number of other individual stocks that are down well over 40, 50, 60% just in the past 3 to 6 months. And, some of those names got way overvalued, and so they needed to come down probably by 40 or 50%. But other names are getting punished alongside them as well and getting to actually valuations that you can defend on an absolute basis, and good businesses that are still growing and, are profitable and aren't going to have a worry if they go through a slightly inflationary or bear market environment. So, yeah, I mean, I think just like in 2020, March of 2020, I'm starting to dip the toe in the water and buy some stuff. And, I'm probably going to be a little bit early on some of that. But I find that there's, some pretty tremendous values already. We were hitting I think March 2020 levels of new lows on the NASDAQ and the NYSE earlier in the week on Monday during the, depths of the hardest part of the sell-off. So the number of new stocks hitting new lows was actually close to the same levels that we saw in parts of March 2020. So the real risk, though, like I said, it's a weird market because you've got the mega cap tech stocks that were still holding up relatively well. And the question is, could those be in a 20, 30% correction in a month or two from now? That's what we saw in the fall of 2018, where Apple and Google and others like that fell alongside the other stocks, but we haven't quite seen that yet. So I do think there maybe could be some more pain ahead for broad markets as we move into Fed meeting, earnings season more deeply. But that being said, I think you gotta know how to do the fundamental work to say, okay, there are good values out there, and scared money doesn't make money.
Yeah, and I think this week, what do we have? Microsoft and a lot of the other big cap companies that were holding up the indices, they're reporting. Any predictions or ideas, or what do you expect?
Well, what I was going to kind of pop in to say is that what if, and this is a very possible scenario, what if big tech does okay? And if big tech does okay, I can make a case for this possibly being the end of this correction, especially with all of the carnage and a lot of the, individual names that are down so much already. It's like, okay, how much more? Maybe some of the growth stocks still have more room to fall, the snowflakes of the world and things like that. But they're already down so much that it's possible that if big tech does do okay, then these markets could hold up from here. And a lot of those growth stocks could start to, be in demand again.
Yeah.
So I think that it's kind of we're in a tough spot because you can kind of tell that the broad indices, that's measured by the S&P and the NASDAQ, are holding at a very key support level right now, like from a technical perspective. And they're really, bouncing off of those levels now 2 days in a row. Yesterday and today, we're seeing some pretty nice reversals off of those support levels. So that's what's kind of telling me, okay, the market's waiting for big tech here. If big tech does okay, this may be it. This may be all we get. If big tech doesn't do okay, then absolutely we could see the markets correct even further. NASDAQ could get into bear territory, 20% plus. The ES, or the S&P could get into bear territory as well, or at least retest or test 20% from the highs. So I think that it's kind of a time for dipping the toe. That's what we've been doing. We're dipping the toe, but we're anticipating and leaving ourselves room if we do see big tech kind of flop and expectations were too high and there's lower from here to go.
Yeah.
I think so. We'll find out later today what the Microsoft numbers look like. And I think, my expectation is Microsoft will deliver. The one I'm actually a little bit more worried about is Apple on Thursday, because while I think their business probably did still very well in the fourth quarter, the question is going to be guidance for this year and if any supply chain issues are hitting margins. And I just see more risk in their business model versus someone like Microsoft that has a lot more SaaS, a lot more enterprise. So Apple also, still trading at a fairly high multiple, still hasn't corrected that much relative to what it did back in the fall of 2018. So that's the one I'm a little more worried about. But, if Microsoft goes and misses and then we get an aggressive Fed, a hawkish Fed the next day on Wednesday, then look out below. So it's not like there isn't risk here, but I'm hoping Microsoft delivers. I'm hoping the Fed sticks to their, we're not going to hike in January. We may hike in March. We're just going to kind of see what the data gives us, and then the market might be able to take a breather for a couple days. You got Tesla, though, on Wednesday, Apple on Thursday. So I don't know. This it's going to be a very wild week. It could obviously go either way. Layer on top of that, geopolitics, Russia, Ukraine.
Yeah.
It is a very pivotal time. I will say, however, looking out a few weeks, we'll get a lot more earnings from other companies. That will start to maybe increase some dispersion between companies. Maybe not everything will be down together or everything up together. Maybe some will actually perform based on earnings. You'll also get the insider buying windows opening up. Corporate buybacks, the windows will open up for that again. So maybe, looking out a couple weeks, the environment starts to ease a little bit in terms of fear and things like that. So
I think it's important right now to really to have a good grasp on the fundamentals of the companies that you're buying. I just, in an environment like this where there's so many unknowns and we're in a transitioning period from this exuberant bullishness to, okay, valuations matter again and we're repricing completely, in a lot of names. I really do think that we were talking about this in the community, that having a grasp on those fundamentals helps you go in with confidence even when things look like death, you know? So I think that's what we're doing. We're focusing on companies that we really want to own, and quality companies that have cash flow, free cash flow. And that's kind of, I know where I've been putting my focus.
Makes sense. So
Upgrading
focus on
the
quality,
portfolio.
recognize what's unknown, right? The known unknowns coming down the pipe, and then trade accordingly. I mean, that's what gives you the confidence to go heavy on the dips, right?
Mm-hmm.
Yeah. I think how stocks are kind of in a holding pattern, Bitcoin and crypto as a whole is kind of also in something really big. I posted this tweet the other day. I'll just pull this up where, I noticed there's a lot of confusion, a lot of people like just trying to figure out what the hell price is doing right now. And a few days ago, I said, this is how I'm thinking of Bitcoin's price. When you're in doubt, when price is choppy, zoom out, right? Like look at the bigger picture, and looking over the past year, we've got a massive trading range in Bitcoin. You got 30K support, 69K resistance, right? And a hell of a lot of chop right in the middle of that. And so right
What
now,
a range.
yeah, massive volatility. I mean, it's awesome. But the market needs that choppiness, needs that time to consolidate, to coil up for the next big move, right? And so obviously nothing's guaranteed, right? But there is the bull case still intact. Obviously there's a bear case that we can explore too. But when you have moving averages that aren't being respected and you have a price magnet, which 45K has been a magnet, meaning anytime we get above it, price pulls back to it. Anytime we get below it, you get pops right back up to it as well. So when you have price kind of oscillating over a key price level, what happens is you get a lot of traps and squeezes, right? So on the short side, you get sellers into support that get squeezed. And when you are showing breakouts, you get these traps. So it becomes fake out breakouts and fake out breakdowns. The worst damn thing you could do is overtrade that, right? And try to get too overly active. And so I said, look, I'm not going to overtrade this choppy zone. I'm waiting for clear momentum and direction. And that's really it. And over the past couple of days, we had another breakdown below 40K and we're here at 35K. What I found really interesting is on the futures chart, basically what we did is it's pretty clear. There was a big gap from last summer that price basically closed yesterday. And if we look at a yearly chart of the CME futures, we basically hit support of the 2021 candle open, right? So we bounced off of a key level in price over the past couple of days, and we're kind of mid-range right now. So again, anytime we're in these periods where it's just kind of unclear, I don't overthink it. And I just say, hey, this is a coin flip. I'm not going to step in and risk capital and risk getting chopped to pieces. So seems like stocks are kind of in a holding pattern, waiting on a few kind of key things. Also crypto price action, just saying, hey, pump the brakes a little bit.
It was really interesting to see over the last 48 hours Bitcoin seemed to break the correlation. I guess crypto as a whole seemed to break the correlation that it had been showing over the prior few weeks, where it was very correlated to NASDAQ, very correlated to risk assets. It actually held up fairly well yesterday, and then today went green, well before stock indices did. So that's something to keep an eye on. Obviously, we talk about the correlation to of crypto to stocks a lot, and unfortunately, the correlation can move around, but, ideally you'd like to see crypto not be correlated to stocks and risk assets.
Yeah. We want to see it take on a mind of its own, right?
Yeah.
When it's trading with conviction and there's capital flow outside of what's happening in stocks, that's what you want to see, both on the bear and the bull side, right? Like if crypto's selling off and stocks are choppy, that's actually okay too. It means there's stuff happening in the crypto market that is different and people aren't just trying to track them together.
Yeah.
We've also seen some really, really deep pullbacks in a bunch of other like mid to small cap altcoins. We've actually had some good bounce plays. In the community, Rocky, aka Crypto Hustle, had a really good bounce play over the past 2 or 3 trading days. There's a lot of cryptos that are down. Like this is a good example, like LRC down, call it 80% from its highs. And you'll get these what look like little bounces. But when you look at them on a percentage basis, like it's up, 60% over the past couple of days, that's where you can step in and be tactical. And even when things are bleeding out, you can play these counter trend moves and really make a lot of money when things are just kind of choppy or slow. So that's what I like to do is when prices are choppy, look at what's beat the most that has the biggest potential for bounces and then stay away from the choppy crap. And that's really it. I mean, outside of that, I just like to keep it simple and, these are the times to prepare and to focus and to plan for the next moves, not to be placing a ton of orders.
So I'm going to ask you this.
Yes.
If Bitcoin, where's your buy zone? If Bitcoin breaks through 30K, I imagine you're intrigued and interested in adding.
Yeah.
Right?
I mean, so what I was actually hoping for, and I use that word loosely, but what I was looking for on the 40K break was if we could have gotten, a 30% or more sell off in a few days. That's my favorite time to buy Bitcoin for a quick bounce. When you have a slow bleed or when you have one big red day and then it kind of consolidates, I'm not a huge fan of buying that because that is usually the sign of just run retracement extension to the downside. So I was kind of expecting over the past couple of days that we could get a move below 30K. And if that happened quickly, I had orders ready to go, ready to buy that stuff. So, fortunately or unfortunately, price actually bounced. It really didn't do much. We had a big reversal yesterday on the 24th, and it's kind of just chilling right now. So I haven't had any aggressive buys yet on a lot of the majors, but just really waiting. So 30K, obviously major support. I'm not going to short into that level, but really just waiting for a compelling setup. And this is where, trade setups, rules-based trade setups can be really helpful, because if you're just looking at price and you're trying to guess what's going to happen, you don't know if you have an edge, right? You want to trade on setups that you can backtest, that you believe have a high probability of working out, right? That's why I stick to my rules. I stick to the trade setups, and 90-something% of the time, the right action is nothing, right? I just sit back and wait for the market to give me something really juicy.
Speaking of that, we have seen a lot of the traders kind of disappear from the markets and on the stock side, just because things have gotten pretty difficult and the environment has completely gone in a different direction. But I do want to mention a lot of people are asking about like future short squeezes or potential short squeezes. And I am in the camp that we're going to start to see some of these really beaten down charts, especially this could cross over into crypto as well, with the altcoins, but we're going to see a lot of these beaten down charts form into trading opportunities. And so I'm really excited about that, actually. And I think that we could go back into this like short squeeze season again in due time. I think with me, like, it's one thing to have a short squeeze setup. You got the short squeeze, the high short interest, and the technical chart setting up. Right now, we don't have the technical chart setting up part, right? Like, so that's what needs to happen. So patience, I think, and paying attention to that is going to be something that I'm focusing on over the next few months.
Yeah, and you guys are kind of beasts when it comes to finding those high probability short squeezes. Like you guys were early to GME. What'd you get in at like $4?
Yeah.
Yeah.
Like that.
What do you
Yeah.
look for, Trav?
Sold way too early. but-
Yeah. Like A, what do you kind of look for a big short squeeze? And B, do you see any right now or are you still waiting?
So funny you mention that because we're right around the 1-year anniversary of the biggest part of the GME Short Squeeze. I think it was like the 27th or 28th of January last year when GME famously broke above like 200, 300, 400 levels.
Yep.
And so I'm actually going to do a video on this on my Stock Geek YouTube channel here, hopefully in the next week or so. But yeah, there's some specific criteria that we used to find GME when it was at $4, and the summer of I believe it was 2020. And so, some of those things, some of those criteria would include, obviously high short interest, but that to me is actually more like icing on the cake. What you want besides just high short interest is also something like a stock chart that is just brutal, a stock that's totally hated and ignored by the rest of the market. People think maybe there's some obsolescence risk. Maybe the financials don't look super great. These are all criteria of GME and AMC, by the way. People love to hop on the GME and AMC train, after they've already done 1,000 to 2,000%. But what did those look like when GME was at $4? What did that look like when AMC was at $2? It looked terrible.
It actually had though, I will say it had a bullish bottoming technical setup
That is true.
that I bought based on, like, you started buying it and then I saw the chart and I was like, holy crap, this is short squeeze material right here, because that it did set up.
Yes, but the fundamentals were awful.
Exactly. Right. Yeah.
So, counterintuitively, like the fundamentals, may not have, very much bottomed yet. And you had to also be able to see that there were potential catalysts. One of the biggest criteria, though, is that the company has to have enough liquidity to survive long enough to have a shot to have a turnaround. And that's the difference between, these squeezes that pop for a day or two, fall off, and then the company just goes into this long-term terminal decline.
Yeah.
And something like GME or AMC, where you actually have enough liquidity for these things to stick around a while, and then they can squeeze high, and then the companies can actually take advantage of the squeeze to raise capital at higher prices, to give themselves even more time for a turnaround. So, I'll detail some of those criteria more, but funny enough, a lot of the criteria revolves around the fundamentals being weak. There being concerns about obsolescence, but enough liquidity to survive another year or two at least, and then high short interest.
So let me ask you about like some specific examples. I'm just going to throw some darts here, like Peloton. Looking at the chart of Peloton, this is one that had a great breakout back in May of 2020. The whole work from home thing, everybody wanted a Peloton. And now Peloton's down over 85% off of all-time highs. It's beat to crap. Is this something that you think could short squeeze, or is this just like one that came down to earth and the fundamentals are bad and it's maybe not poised for a big pop?
I think it's a little bit more of the latter, to be honest. I don't think we're in territory yet where I'd be looking for a setup for Peloton to squeeze or double from here in the near term. They've got some significant fundamental issues, and there's still a lot of debate, bull and bear, on where Peloton goes from here. But, the company, the story of Peloton, really the reason why it's down 85% is because they invested too aggressively in the business as the business was starting to slow down. So they had a great pandemic, accelerated demand for their products, very, very, strong brand value and things like that. Their financials were looking great until about the second or third quarter of this year. And the thing that you had to notice as a fundamental investor was their most recent third quarter that they reported. They went from being a cash flow generating business to having massive losses within one quarter.
Mm-hmm.
So they burned a tremendous amount of cash flow in the second and third quarter of 2021. And you look at the balance sheet, and there wasn't that much cash to be able to stomach those losses for a number of quarters into the future. And they had invested aggressively in increasing the amount of, bikes that they were going to produce and the amount of marketing they were doing. But actually, the demand was starting to slow down. And so you had this combination of, finally the post-pandemic effects of demand slowing down and the company having done the opposite of what they should have done and been way too aggressive on investing in, more marketing and production. So long story short, what happened was, the margins went to, negative levels, burned a bunch of cash, had to raise capital. And then, now they face a situation where they've got to cut jobs and restructure the business. So Peloton does still have a really good core business of subscribers. I think it will grow longer term, on a multi-year basis. But this year is going to be very much a transition year where they got to like cut a bunch of expenses. There's probably going to be some ugly quarters reported for a little while. And it's going to be a little bit of a transition before I think you get a nice setup to where, the sentiment's washed out and fundamentals start to maybe improve a little bit.
Didn't they even say this week that they had to stop production of new bikes because the demand fell off a cliff? How crazy is that? That like, and this just speaks to like mass human psychology and the markets and how it affects things is like, pandemic happens, everybody wants a bike at the house, right? And then everybody yeets into the stock. See, I'm going to use my Gen Z words. Everybody yeets into the stock and it goes crazy. It goes from like $20 to, over 150. And then like, just like that, the situation is completely different, right? It's like, that's why I love investing. Cause one day, you can have the world looking like a very specific picture. And then a week, a month, a year later, it's like completely opposite.
Well, I mean, they overcorrected in their business, right? They wanted to capture as much of the demand as they could, but I think most people were thinking, okay, eventually things are going to level out in our world, and it's not going to be like that forever. But now there's consequences to that, and Peloton is actually not that heavily shorted, like. Extremely heavily shorted. It's definitely starting to get an increased short interest. This is one that I could see over the next, few quarters. Maybe, like you said, the quarters are bad. People start shorting it more. They beat it down. And then, as they stabilize, as they lean down their business and kind of recalibrate, things start to look a little bit better fundamentally. Then that's when maybe a short squeeze could happen. This is one that I think is good enough to keep on the radar, but it's definitely not there yet.
Yeah.
But this scenario is playing out in a lot of stuff right now. So that's the key here is even though right now it's been tough for traders, I'm talking about short-term traders specifically because I know a lot of people that, watch us are short-term focused as well as long-term focused, including myself. So I've been eager to get into the charts and get back into my trading game, but it's not quite time yet, but I think that these types of setups are going to roll out over time.
Yeah.
Yeah, you do love to see that change from what you were talking about with the sentiment is, just gangbusters positive, businesses firing on all cylinders, everybody piles into the stock at any price, sends the valuation multiples up to crazy levels, and then the opposite tends to happen, the overcorrection. Oh, business slows down, maybe it's not as exciting, people bail, all of a sudden the stock's down 80, 90%, and now you're like, okay, can I get behind it at X price, once the fundamentals start to bottom, and then maybe I've got a multi-bagger on my hands if I time it right and buy in at a reasonable price. I love that type of scenario where, you have fallen angels like this.
Yeah.
Listen, all Peloton needs to do is start launching NFTs, and they're. I guess we could talk about that, but yeah, I mean, if they just start launching NFTs, doesn't matter what they are, people are gonna go crazy for them. So
what's going on in the NFT
I'm
world?
loving the NFT debate right now.
Yes.
You've got half the world loving them and half the world absolutely hating them.
Well, you got half the world trying to just chase easy gains, and they don't even know what the hell NFTs are, what purpose they really serve. They're just they hear a story, they hear the hype, and they're like, yeah, that. Let me get rich with that. And really, a lot of cases, it's just hot air bullshit, right? I've been on a hunt for good use cases that actually make sense. And I hate to say this, but most of the time I'm deflated when I think I find something that's interesting. But look, long-term, super bullish on NFTs because it's such a massive, broad term, right? It's like, are we bullish on stocks long-term? Yeah. Are we going to buy Peloton at $150? Probably not, right? Like it's the same thing. Like NFT is just a non-fungible token. It can do a lot of different things. It makes sense for concert tickets, for memberships, certain things. Am I going to put $1 million into a JPEG? Probably not. I'm not going to launder money. I don't have a big ego. I don't really need to buy the damn JPEGs, right? But with that said, there are some interesting use cases. And I was tweeting the other day. I was like, hey guys, what are the best use cases that you guys have found for NFTs? And I got a bunch of answers, and everything from it's basically a scam to very specific things like gaming and, events and memberships and things like that. There was actually a guy I saw yesterday, a video from a game developer that was basically making the bear case for all the NFT gaming stuff. And he's like, look, it's going to, the perverse incentives are really bad for the environment, meaning the gaming community in that environment. And so it got me thinking there, but I was looking for, okay, what are some real world use cases that are actually happening now? And something that popped up a couple of times was this restaurant that Gary Vee and a couple of guys are trying to launch in New York City. It's called Fly Fish Club. And I started doing some research, and I really wanted to get behind this, but I couldn't make sense of it. So basically, it seems like they're kind of raising funds for this restaurant in New York City. It's going to be a cocktail bar / sushi restaurant, and they're selling NFTs. And to be able to get into the restaurant, you have to have an NFT, and they verify that you're a member of this club. I'm like, okay, cool. If I buy the NFT, what does that get me, right? And the NFTs right now are going for like $15,000 to $20,000. And I'm like, all right, I hope there's some real world benefits to doing this. Not that I could see. Really, you're paying 15 grand for the right to be able to make a reservation at this restaurant. No discounts on food, no free drinks. I didn't see any advertising of like, you get something tangible for this. It's kind of like the Amex Black Card or something where it's like, yeah, you pay us a few $1,000 and you have the right to use this product, or you have the right to pay us for food and beverages. And I'm like, okay, I can see the ego play there, but outside of that, who really gives a shit? Is it like Soho Club? Somebody on Twitter was like, oh, it's like Soho Club. It's like a membership. Or somebody else was saying it's like a concert ticket or a game, but it's really not, because when you buy a concert ticket or you go to a sports event, you're getting that. That's the product. With this, you pay 15 grand for the right to be able to book a reservation at a restaurant. I just don't get it. I don't know. Maybe I need to have a bigger ego or something. I don't know. What do you guys
think? Is it like a hot restaurant that's going to be booked out all the time that like the NFT gives you priority to get in?
That's the idea, I guess, right? And they're even saying like, okay, you can rent your NFT out if you're not using it. You can rent it out and maybe earn royalties. I'm like, yeah, that's assuming that there's a strong secondary market for restaurant reservations.
I mean, I would pay someone for a Red Ash reservation.
What does the supply look like on that? Is it constrained enough where that might actually financially make sense? Where if the restaurant is in demand and you're renting out your slot every night, then you could maybe break even or do better?
Possibly. I need to pull this up. I don't know exactly off the top of my head how many they sold, but I did the real quick back in the napkin math, and they're raising tens of millions of dollars through these NFT sales I'm like, okay, cool. Like you guys basically bootstrapped and did like a crowdfunding campaign for this restaurant, convincing people that it's going to be the most badass cool thing and it's worth paying 15 grand for the right to make a reservation. I just don't get it. Like,
I love the basic idea, but you have to get the execution right on this. And unfortunately, it does sound, and I haven't looked into the details as deeply as you, but it does sound like they haven't quite attached enough of the benefits to these NFTs. And I'm not sure if they've constrained the supplier enough or not. But you could imagine, though, that if someone did it right, like they did something, let's say restaurant and cocktail bar focused, you could, if you kept supply small enough for that region, and then, the restaurant was a good restaurant, you could attach perhaps even a percentage profit share. You could attach, discounts on drinks and food. You could attach, the ability to get the best tables, right? There's lots of ways you could think to enhance the value of this NFT. And that's the kind of stuff that I've always wanted to see done with these types of products, with STOs or NFTs. And just like nobody's doing it. It's like all the creators of these so far just want to maximize their own economics, rather than making it more of a sustainable and very interesting product, right? And the cool thing that you could do here, and maybe we should do it or try to partner with the right people to do it, is if you do the first one right and you make it extremely valuable and you make it extremely useful for the buyers of it initially, then you can go on to do more of them later. You open your second restaurant, your third restaurant, your fourth restaurant, right? And the whole ecosystem benefits, and you just build this ability, this juggernaut, this company that can repeat this process over and over. And the long-term economics to that seem like they'd be way better than trying to maximize the economics out of the very first one that you do and then piss people off and they're like, not worth
Exactly.
So hear me out. Am I understanding this right? I want to open a pickleball bar. I decide I'm going to make pickleball NFTs and sell them. And the person that buys my NFT, they get to come to my pickleball bar and they get unlimited pickleball for the rest of their life for buying my NFT, or like free drinks on Fridays, or like something like that, right? Like, is that kind of where it could go, or where it's, I'm still trying to understand.
Well,
this whole
that's
NFT thing.
what you just said makes more sense to me than saying buy my NFT and you have the right to make a reservation at my restaurant. Oh, thank you. Okay, I could go to another great sushi restaurant without paying 15 grand for a damn reservation. But yeah, if you open a pickleball bar, it's like, okay, if you're the platinum level NFT holder, you get 1 free hour of pickleball a week. You get a free drink. You got, 20% discount on food.
Right.
All of a sudden, those economics start to make sense. And then if there's a secondary market for those NFTs, if there's super high demand
for those
slots, right? Yeah. Because you can say you have 2 pickleball courts and there's X number of hours of playable pickleball time a week.
You can
and
sell or rent.
Like right down the street here in Austin, there's a couple pickleball bars that are always packed now because that damn sport is blowing up so much. Then you can be like, all right, well, I'm kind of done with pickleball, or I'm moving away. And this bar is way more popular now than when I was playing here locally. I could sell that actually for a profit and recoup all the costs that I put into actually playing there. That to me makes a lot more sense. But when it comes to the restaurant thing, maybe I'm salty because there have actually been a couple of crowd-funded, I guess you could call them startup restaurants here in Austin, that they did that model. They crowdfunded, small amounts from several hundred people, and they got benefits, they got discounts. And I think so far, all the ones I know of have actually failed. So when I think of like, okay, I'm going to pay a shit ton of money not to have any equity in the business, not to have any discounts or tangible benefits, just to be able to reserve a spot, I don't see that working. I hope I'm wrong. I hope somebody out there can point out what I'm missing, but it just doesn't make sense.
Is it more so like, is it more so like, the monkey NFTs? What are they called? The board monkeys and like
board
apes and stuff like that.
Mutant
and the
ape,
crypto kitties and all that shit. Is it more so about being like in the club, quote unquote?
Sure. I mean, that's the thing. There's intangible value, but as a trader and an investor, we know from our experience in the markets and looking at different types of fundraising that those things always crash. When there's no tangible value, when it's all, the greater fool theory, without fail, all those things always crash, always, 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 right? So I'm like, all right, if Gary V, if you're going to put your reputation on the line and you're going to raise 20, 30 million bucks for a restaurant, it better work, man, because if not, like you said, Trav, like if you piss people off, that model's done and nobody else will be able to do it successfully. If you do it right and you treat people right and you give them some tangible value, it could actually make sense. And it could change the way that restaurants raise money and the way that they service loyal customers, right?
Yeah.
If you do it wrong, it could end very badly.
It's the difference between being short-term greedy and long-term greedy. Long-term greedy always produces more value in the end. This is true whether we're talking about NFTs or people doing business deals. It's always better to be longer-term greedy, and so, it's like exactly what you're saying is, don't try to, if you're Gary V and co, why are you trying to maximize every possible dollar you can get out of the very first one? Add value, create value. Add tangible benefits, make it a wild success, then go on and do it 50 more times,
But
and maybe
why bother?
over time.
Why bother if people are paying $500,000 for a bored ape?
No, it's a fair point,
right?
but again, it's because short-term greedy versus long-term greedy.
Gotcha.
They're going to do great on this first one, but when this thing inevitably, crashes because it's all just greater fools, then, how are they going to get number 2 through 10 through 100? You're trying to build, you want to build the long-term Chick-fil-A franchise business. You don't want to just be a one and done.
Yep.
I'd much rather.
My guess is the way to be smart with NFTs, is to think about what are the economics and where's the greed at play, right? And like what are the implications for the economics? Like, for example, something I think is going to actually be a benefit for end users is concert tickets where scalpers can't flip those tickets and keep all the profit, right? There's a way that if I buy a ticket to Hanson or
Yeah, don't call me out
Backstreet
like
Boys,
that.
yeah. If I buy a ticket to a band and then, you know, say the real value of that ticket is $100, but I have to get it through a scalper and I pay 500, it's a much worse experience in so many ways. So one way that you can disincentivize that behavior is through NFTs, where you basically make it so any increase in the price goes right back to the artist or whatever, right? The venue, you can do it however you want. But like, think about what are the economics and what are the implications and who benefits and who doesn't. That's why, again, I hate to beat up on the Fly Fish Club, but it's like, who gets the economics? The founders of the restaurant. What does the end user get? Some intangible, you're part of some cool club. Okay, great. I guess some people give a shit about that. But outside of that, what benefit do I get? Well, and I noticed on the website, it says some kind of party, you know, there's no like events and pop-ups. Well, okay, fine. I don't know. I just don't see it in the restaurant space because the failure rate in restaurants is well over 90%. And I've seen them personal examples of how crowdfunding restaurants don't work, even when you have equity in the business.
Yeah.
So
I hate to be a Debbie Downer, but
Yeah.
damn, I'm just,
No.
I want this to work. I want NFTs to work, but there's so much bullshit
it's
out there.
really
It pisses
tough
me
right
off.
now because I'm trying not to be such an old millennial and be like, NFTs are a scam, you know?
Yeah.
Like, I'm trying to understand why someone would pay so much for a Bored Ape or da-da-da-da-da. Or, you know, is it really like collectible art, you know, or whatever? And I'm really honestly trying to understand all sides. But it's amazing to me to see the bifurcation between, like, obviously professional people in finance that are like, these people are going to lose their shirts, like, no doubt. Dead ass, right? And then like the people that are hip with it and, you know, buying NFTs and they have a collection of NFTs, and I don't know. I'm just trying to truly look at both sides and get it.
Yeah, because there is a fine line between being early and recognizing trends and doing something that seems crazy but is going to work in the long run. There's a fine line between that and just being the greater fool.
Yeah.
In something that really has no value. And if you take big bets thinking you're going to get rich, but you're not early enough, you're going to be the one holding the hot potato.
And I think that I'm with you. I think that the speculation has gotten way too far, right? And I think that that's going to eventually correct itself, and the people that are adding value with NFTs are going to come out ahead, and this is how the new markets work, right? This is how it goes. And it's actually interesting because I got a question from somebody about like writing off an NFT on your taxes. So I kind of did my own research and kind of came up with my answer. And then I took it to my network of advisors and CPAs. And they're like, don't touch that with a 10-foot pole. Run as far away as possible because you don't want to be the one that sets precedent for the IRS, you know, for NFTs, because it's the wild, wild west right now with NFTs and taxes. Like, I'm kind of taking it to a financial planning space, but I got that question. And I think a lot of people are trying to like find ways to write them off and find ways to like skirt taxes on them. And there's a lot we don't know. So
would your advice be more conservative then? Like, just don't do that. Don't be the one sticking your neck out there.
You don't want to be the one sticking your neck too far, doing things that are too off the walls and away from the code, like the actual IRS code that we do have.
Yeah.
You can interpret it and you can utilize, you know, you could say an NFT is an intangible asset, and there are intangible assets out there, trademarks, copyrights, right? And there are tax laws to handle those assets and amortize those assets on your taxes and get a deduction and so on and so forth. But we don't know for sure. And that's the problem. And so it really is kind of like, okay, who's going to be the one that sets this precedent?
I mean, tax issues aside, I think the message we're trying to send is not to be Debbie Downers, because we want NFTs and STOs and other parts of the crypto ecosystem to succeed. What we want to see, though, is utility attached to it. We want to see people do it right. We want to see the users benefit. We want to see the promise of crypto actually fulfilled. And, the more and more NFT supply that hits, the tougher it's going to be for this asset class to produce these crazy returns because it's, everyone wants to be in a cool club or whatever. It's going to be more about, I think, longer term, the utility. Like, what can you offer? How can you package it up in unique ways with unique value? And so that's the message I'm hoping to put out there to the world, which is like, hey, if you're working on this stuff and you're involved, think about ways to add value for the users and utility to these, products so that like this thing can succeed longer term.
Yep. All right. I'm going to do this. I usually, obviously, we never talk about projects. We don't get paid to promote projects, but I will say this. If anybody out there that's listening to this is involved with or knows of an NFT project that has, what do we call it? Like ethical economics or economics that make sense and actually have utility, reach out to me and let me know. And I'll be open to actually talking about it on the show. I don't need an endorsement. I don't want to be paid for it. But just know if you reach out and it's a scam and it's bullshit, I'm going to call it out too. So I think we should do that. Maybe we should make that a segment of like looking at quality and then also exposing stuff that really doesn't have value, because that's what we want to do, right? We want to educate people on how to trade and invest the right way and not lose their ass, and also help the development of good projects. So I'll throw that out there. If anybody is excited about something or sees something that has real utility or you're excited about, or you want to see us do some research on the fundamentals of it, reach out. We'll maybe take a look at it.
We should probably explain, by the way, now people know, our viewers know, we all like pickleball a lot. Yeah. We're huge pickleball fans. So like anyone doing an NFT around pickleball, let us know.
Yeah. My cousin's actually investing. They're doing a crowdfunding situation in another city for a pickleball bar. So like, do you need an NFT for that? Not really, but you can use it as a better way to manage memberships.
That's the thing, because she does get benefits for investing through the crowdfunding platform. I remember she mentioned that.
Yep.
But yeah, how are you tracking all of that? And is there a more efficient way to do that with NFTs?
Yeah, that's where I think an NFT could make sense, is like, if you were getting a discount at the bar and you had your verifiable NFT, like that to me makes sense, right? But just to do it to be able to make a reservation or something of no value, I don't know. I don't get it.
Facts.
We're trying to like learn Gen Z speak. Yeah, that's what we're doing right now.
Yeah, we were at the bar the other day, just like, let's pull up a list of Gen Z words now that we're old. Anyway, okay, cool. So let's recap. I know we've been going about an hour. So markets coming off of a deep pullback. Bitcoin still mid-range, wide volatility. A lot of alts are beat to crap. You can catch some bounce plays right now. Stonks, what are you guys doing? Have you guys been buying like crazy? Are you waiting? What are you thinking? I know I've seen a lot of alerts in the community, but maybe just tell us for the next few days going through earnings season and Fed announcement and all this. What are you guys looking at? What are you doing? What are you expecting?
Yeah, dipping the toe, not trying to go too aggressive, giving ourselves, at least, I'm speaking for myself here, giving myself room to add and continue to add if the market goes lower. If we do get a 20 or 25% correction in the overall indices and some individual stocks continue to go down, there's going to be some amazing value. So I don't want to use up all my dry powder right away, but I have been dip buying on a few stocks where I'm comfortable with the fundamentals. I'm comfortable with the current valuations. And certainly if it falls, I'd be even more excited. Obviously, I have more like 1 to 5 year timeframes on most of my stuff. So just keep that in mind. But yeah, I mean, I think it also helps having some hedges on. So that's helping reduce the impact of the market drawdowns on the overall portfolio. But yeah, I mean, I think there's already some interesting values out there. If the market keeps dipping, we're going to have some really interesting stuff. I don't see 1% higher interest rates as that big of a deal long term. Some stocks got ahead of themselves, but as long as you're thinking critically about what you're doing and doing the fundamental work and you can get comfortable with what you own, I don't see why lower prices wouldn't ultimately be a good thing for some stuff here. So that's my take, but I'm looking at Microsoft down after hours here. It's not down too much, but maybe the market wants to go lower. So that's fine, Just don't be too leveraged. Give yourself room to add lower.
There you go.
Yeah.
Nick, what about you?
Revenue
Final
was up
thoughts?
20%, it looks like. Yeah. Yes, that's, I mean, revenue up 20% for Microsoft. I mean, it's, golly, that's still pretty damn good. Like, geez. I mean, these big tech companies are growing like growth stocks still. And that's the thing. Like, this is why I think that there could continue to be demand for these big tech stocks. Sorry, went off on a tangent. I feel the same way as Trav. I've been dipping my toe. I have my hedge, quote unquote, has been generating cash into the rise in a lot of the stocks that I've held in my portfolio over the past, say, 6 months. So I was able to really build up my cash position in preparation for something like this because valuations were getting stretched. And so glad I did that. That was my way of kind of protecting the portfolio. And I'm going to wait and kind of see how big tech earnings goes. Once we get through this week, I'll kind of have a better feel for how much more capital I want to deploy and how quickly I want to deploy it. But there's still, I mean, there's opportunities abound. My shopping list of stocks is like 20 deep at this point. So I'm just, honing in on exactly what I want to make a bigger position or add to my portfolio that I haven't been able to have. Names that have been just too expensive. Now we're seeing opportunities to have those names. So that's pretty awesome. Yeah.
By the way, it's not all puppies and rainbows over here. I definitely got some stocks and drawdowns. My SPAC warrant play that I thought was great when SPAC warrants were trading at 60 cents. Now those things, a lot of them are down at 40 cents, down a third. And I'm like,
yeah. And I was way early on a lot of the stocks that I started buying into and scaling into, but that's why I scale in. I scale in because I don't know how much lower things are going to go. So, grateful for that strategy. But yeah, look, we didn't know. I mean, the market environment shifted so fast and it went from exuberance to now we're extreme in the other direction, right? That's what the market does. They say the market is efficient. The market is not efficient. Okay. The efficient market hypothesis is a sham.
Yes.
And as we've learned over the past year, like so many stocks went from one extreme to the other, and here we are. So.
Well said. I mean, look, drawdowns are a part of it, right? And I always say in crypto, like, if you want to find out who you are as a person, trade the crypto markets because you will experience pain and glee beyond your wildest imaginations. And if you can't stomach a deep drawdown, then don't either buy it and put it on a hardware wallet and don't think about it, or just, take Nikki's mental mastery course because the mental game in this is definitely the hardest part. And if you haven't been through a full market cycle, like, we've been in crypto since 2013. If you haven't been through it, you don't know what it feels like to be 50% underwater from the all-time high. Like, get used to it. Buckle up.
Well
said.
Hopefully, yeah, this is why you diversify and you're not in a 100% YOLO crypto position, but some people are.
Yeah.
And they just have to have really thick skin.
Mm-hmm. Well, I think that's a good place to leave it. Thank you guys for joining us. Thanks to YCharts for sponsoring the show. Hope you guys like the new setup. It's a little bit better than our laggy Zoom calls we've been doing.
Yeah, sorry about that.
your new Potato 4 camera, as someone commented.
Yeah, I saw that.
Wait, what did they say?
I said, I love how you're filming on the new Potato 4.
That's what happens when you're in the country and you have a 600 ping on your internet.
Oh my gosh, I know. Nature comes with its consequences.
Yeah. All right, guys. Well, thanks for joining us. Go to WeTalkMoney.com, submit a question for the show, which we will get into more questions next week. Go to WeTalkMoney.com/community if you want to trade and invest with us in the community. See what that's about. And yeah, we'll see you guys next week. Take care.
Ciao.
See ya.